Happy Monday morning and welcome to Wake Up Real Estate. It is Monday. It's October 2nd. Hard to believe we are already in the last quarter of 2023. Because it's Monday, we're going to talk some mortgage, some motivation, and some marketing. I'm going to start on the motivation front with something simple, but it might just be the message you need on a Monday morning. Don't let the growth of your dreams be limited by the size of your comfort zone. Don't let the growth of your dreams be limited by the size of your comfort zone. I texted that to my kiddos this morning. A good reminder for all of us. The Wake Up Real Estate Show every day, each and every day, is brought to you by the virtual mortgage providers at NEXA Mortgage and by Thanks.io. We're going to do some mortgage talk, and I'm going to come at it from a little different angle today when we get into mortgage. Ryan, happy Monday morning to you, sir.
Good morning.
For those wondering about the open loop from Friday, did Sam pass?
Oh, he did pass. Oh. Yeah, he did.
Beautiful. If you don't know what we're talking about, Ryan on Friday for the show was coming to you live from a parking lot while his son was taking his driver's test. So you can go back and listen to that. There's some great follow-up thoughts and nuggets in there for those of you if you missed last week or any of last week's show for that matter. You can just go to wakeup.realestate and look at the latest in all of last week's shows, last month's, last year's. They're all on there someplace or another. Ryan, social post today? Yay or nay?
Yeah, it was just in the spirit of Mortgage Monday. Let me bring it up here. All I did was take a quick video of the effect of interest rates on mortgage payments, but it didn't really add any comment to it.
Okay.
Didn't have time. I was just throwing this together before. So we have the little mortgage calculator tool in the website that I just recorded. Let me find the present screen here. Sorry about that. So I just did a quick little recording as I changed the interest rates. So it could be a fun thing you guys do. Just grab your screen recording tool. I put little arrows as the rates go up. You can watch the monthly payment. I could probably make this a little sharper. It's a first pass, but something is better than nothing.
Right.
So hopefully, people will comment. And of course, as we've been talking about, you can spin this either way. Hey, if you're worried they're going to go up, might be a good time to sell your house. If you're thinking they might come down, well, I don't know. If you're waiting for them to come down before you buy, stop waiting because, you can play on the scarcity or the fear that you're going to be paying a lot more in 6 months if the pace continues.
There's something to the fact that no matter what's happening with rates or the market, there is always a way to look at the silver lining, let's say. And so the National Real Estate Post, which I think they're also rebranding as Mortgage Shots, they've got great video content that they release every day or most weekdays. And last week, towards the end of the week, one that they were talking about was the fact that if someone is trading up, right, it's actually to their advantage if those higher prices are coming down, right? So though they might not be able to sell their average or median priced home for quite as much, they will potentially more than make up for that on the purchase of the home they're trading up to in the discounted price, quote unquote, that they're getting. And then when rates do potentially come back down, that's immediately going to create some forced equity opportunity. So, I mean, there's not always a way to find a silver lining for every client per se, but there are, no matter what's happening in the market, there is a portion of the market that can take advantage of whatever's going on, take advantage of or maximize the opportunity of what's going on, right? But it's not always going to work, right? And it's not always going to be. I was having a Facebook Messenger conversation yesterday with a potential client who's going through a divorce. They've got to sell a house that they've owned for less than a year, and he's got to move into a rental. And like, it's not ideal. Sometimes, you just got to help in a non-ideal situation and provide the best service, regardless of what's going on. So, Jordan, on the mortgage front, I wanted to have a little bit of a different conversation today because we haven't really talked about this on the show. This being the fact that we are very actively looking to bring on more mortgage folks to our team, more licensed mortgage loan originators. And we have added, I don't know, 4 or 5 or 6 people in the last couple weeks. And there has been a change at our mortgage brokerage that has allowed, it's made it easier for us to grow and to bring on more folks. Now, we're not just bringing on anyone, right? We want to bring on people that are serious about the business. Obviously, you need to be licensed or willing to get your license. But if that's the case, we've got a pretty incredible opportunity for you here, which if you'd like to explore outside the show, you can schedule at josh15.com. Many of you have Jordan's contact information if you want to chat with Jordan. Maybe let's spend a couple minutes on that, Jordan.
Yeah, I don't know if everyone knows. Am I muted? Oh no, I'm not muted. You can hear me, right?
Yep.
It's in my Zoom. I'm in like 3 different things right now. So it's telling me I'm muted. No, I don't know if a lot of people know my background, but my background was I was a director for NEXA for 2 or 3 years, and I ran their training program.
Yeah.
And I had about 500 students at the peak. And so it's the same thing we'll do with our team is we'll help people get into the business, but also we want experienced loan officers to be able to use really have the mindset that we go into every day, which is increasing realtors' GCIs, right? If they don't have that mindset, I really don't want them a part of our team. I want that giving mindset. But that the changes that NEXA has allowed me to expand, get back into training a little bit, but also allow us to scale more rapidly and help more people in more states. So we will be looking for states really where the big kicker is I am looking for people in states that you have to have distance requirements. So like, for example, Nevada, we are working on our Nevada a lot sooner than expected because we have someone coming on in Nevada. So I will look for those states as we go. That way, people that watch the show that say, "Oh, you're not in my state yet," we get a lot of people, trying to sign up. I'm hoping to curve that a little bit more and have more availability around the country for us specifically, our team specifically.
So if you are already licensed and interested in exploring this, let's chat. And also, if you're currently working with a mortgage pro who maybe they've been frustrated with what products or programs they have available to them, they've been frustrated about their compensation or something else about whatever their current relationship is, we would love to explore and see if NEXA and our virtual mortgage providers team might provide a better opportunity for them. No pressure, no hassle, no sales pitch. It's let's collaborate and let's determine together, does this make sense or not? From a product and program perspective, I can tell you that it will be hard to beat what we do, given that we have access to nearly 220 wholesale lenders and over 4,000 private and hard money lenders. So as far as the ability to help the greatest pool of potential clients, it's going to be hard to beat that. And it's also going to be hard to beat the compensation that is offered. And oh, by the way, the ability to build a revenue stream from growing your own mortgage organization as well. So if that's at all of interest to you, get back to one of us here. You can schedule at josh15.com or let us know in the comments, or use the little chat widget at wakeup.realestate in the bottom right. One way or another, we'd be happy to help. Jordan, how would you, we haven't even talked. What was the mortgage activity like this weekend?
The activity itself on our business, I mean, it was still pretty busy for me. I had Colleen and Dana out on Thursday and Friday.
Yeah.
We had a really an odd week, I felt like. I think we got into someone's database, and I know for me, I really felt it because I took on those meetings where normally I would have
Jordan was screaming mercy to
the amount of meetings Mike set
Yeah.
On Thursday and Friday was let's just say I was back to back for about 11 hours, right?
Yeah.
All day long. So there's definitely activity. I can see that there's definitely activity there. I pre-approved a few people over the weekend, and then also rates dipped a little bit in the middle of the week, and I was able to secure a little bit lower rate for clients, and then it dipped right back up. It came back up, but we're still seeing some volatility. It's still volatile, and we're still expecting at least one more rate hike. But after this last rate hike, I'm hoping inflation will start really dwindling, and then historically elections have had interest rates drop, so I'm really hoping to see some going in the opposite direction, and then our next worry is making sure that we don't have people refinance too soon, right? Get out, anybody that bought is to jump the gun, because there's definitely going to be people wanting to get out of their current interest rates.
Yeah.
So being able to hold back and say, hey, let's hang out for a little bit and let's see what the market does. We don't want to have we call it churning in mortgages, where you just every 6 months you refinance someone, right? And just keep on doing it. It's not really beneficial for them. But
it's not beneficial for the client, right? And that's what's most important.
Yeah,
is the client.
Yeah. But I'm hoping the end of quarter 2024 we see some leveling out. So
I don't know what this means, but in the spirit of marketing part of this, I was yesterday afternoon, Sunday afternoon, and in between doing some yard work and so forth, I'm sitting with my boys watching Red Zone, and my phone starts dinging, and it's people in our mortgage CRM, people that automation was sending messaging to. And all of a sudden, while watching football Sunday afternoon, I set like 3 or 4 appointments from automated replies that were designed to generate or in this case were designed to revive a conversation with someone that maybe we had already talked to and we were waiting on their application, or they had scheduled an appointment and didn't show, or had to reschedule, or whatever the case may be. These were people that were already sort of engaged, and we were running automation to re-engage them. And I don't know, the takeaway for me was like, because people will often obsess over like, when's the ideal time for me to send this message or do this, that, or the other thing. And the ideal time is any time that you'll do it is better than a time that you don't, right? And obviously there are exceptions to that. You don't want to, I don't know that you want to go messaging people at 8 a.m. on a Sunday morning. But this was, Sunday afternoon, and I was just hanging out with my phone, as everybody seems to do now, right? We had 2 screens. We had Red Zone and a game, and I'm on my phone. It's just the world we live in. Might as well start the week off right with some appointments already on the calendar. I had the bandwidth to have the conversations and to set them, so I did. I just hopped in and continued those conversations and made it happen. So I guess the point there is there's still motivation in the market, and what works, right? Like what the conversation style text scripts that we share each and every week, which, by the way, tomorrow's Texting Tuesday. And for those wondering, I'll just share some of the scripts that people were responding to. Just curious, when do you think we should expect your application to be complete? This is somebody that we had a conversation. Colleen sent the application. We didn't get the application back yet. So just curious, when do you think we should expect your application to be complete? And then in parentheses, I want to make sure we have one of our specialists review as quickly as possible. And this is this scripting I built out last week to have as a follow-up when Colleen has a conversation and sends an application. Here's another script. Hi, Phil. I work with the agent who this contact belongs to on the mortgage side of things. Do you have time for a quick chat about your financing options? ? Maybe tomorrow around noon, or are you not that far along in the process yet? That's Ryan's script, right? The kind of the takeaway, the soft. Are you not that far along? And in this case, Phil said not interested, but that's okay. He replied, right? That's all we're trying to do is get a reply. Let me give you one other. I think there was one other example. Very simple and straightforward. Any luck with the application we emailed over a few days ago? First name, let me know. Thanks. And she said, I didn't get the email, which alerts us that, hey, let's make sure that she gets the email. She gets the the link for the application. So a couple of takeaways there. Simple follow-up scripts. And then there's always the opportunity, and Ryan says this often, and I don't do a good enough job with this, taking things that work and building it into automated follow-up, right? If you're using KV Core,
yeah,
you can add more of these in to your automated follow-up so that these conversations can be happening more organically over time versus only happening Tuesday afternoon when you take the script and you blast it out, right? Which is still good.
well, when you remember to.
Right,
Yeah.
right.
When you remember to take the script. Yeah.
Yeah. Anyway, that's all I had to share on the marketing front. Anything else from either of you before I do some housekeeping and schedule for the rest of the week?
Yeah, I mean, yeah, absolutely. I have one thing I want to talk about. This is something that's really I thought about a lot lately, and because I'm rebuilding out our training platform. Yeah, I mean, you know this. We're putting together a training platform.
our mortgage
Yes,
training
correct.
platform. So for licensed originators. Yeah.
Yeah, licensed originators. Knowing your products, right? Working with someone that knows their products. This week, just two people, they're actually in my downline. They were actually on my team, but two people came to me and they didn't understand something, or they were getting held up in underwriting on something. One was a structural engineer report with a conventional loan on a mobile home. Okay. Another was an FHA deal, trying to have two FHA loans, right? And we know we've gone over that a lot where you could have two, but you'll be.
Hold on, Jordan. It gives me, anytime you do that, it gives me an opportunity. We did a very deep dive, actually two sessions on FHA guidelines and unique strategies with FHA. You can find them on our YouTube channel. And on the website. If you can't find the direct link, just use the chat widget at wakeup.realestate. There's some really good information where that by you being more educated, you can have more better conversations and be able to maybe uncover client opportunities where if you didn't know X or Y or Z, the conversation maybe dies. Versus knowing, oh, by the way, I know that you may think that, but that's actually not true. Blah blah blah. Anyway, sorry. Continue.
Yeah. So I want to make it clear, underwriters are people, right? And people make mistakes, and you'll be surprised on how little an underwriter knows. Okay. Most of them are very task check. I need to check the boxes, and mortgages are so expensive. Both of them got overturned by me. Okay. In these situations, one is they were taking that mobile home Fannie Mae. If you go Freddie Mac, you don't need a structural engineer, by the way, guys. And number two is if you have an increase in family size and your current house has 75% LTV, which most people do, in this market, they have a 25% equity if they've been in their house for a while. You can have another FHA loan, right? As long as you explain it, you can have two.
Say that again. Say that again.
So current home has to appraise for a 75% loan to value. So
Right.
it has to be 300,000 versus whatever 75. The loan amount 75. But they have to have an increase in dependence. So if they had another child, right, or a dependent, they can have another additional home loan, or even a separation, right? If someone's separating or a divorce, right? There's 4 or 5 different scenarios that you could go through.
So they could keep the current home as a rental with the FHA mortgage and buy a new home with
Correct.
an FHA mortgage.
Correct. So you can do that as long as the current home has a 75% loan to value and there's at least an increase in dependence. So the whole house no longer fits the family needs.
Yeah.
Right. It's an easy letter of explanation. I usually personally, I do a birth certificate. I just grab a quick birth certificate, something like that. Or, caretaking for an elderly family member or something like that. There's some sort of paperwork out there that you're doing something. But there's other scenarios too that this would fit in the bucket, right? Co-signing for people and other things. But anyway, we overtoed those things. But I had something, one of the realtors that we worked with, and I was really super happy that he did it. It's not something I challenge often, but on a VA home loan, when you need a termite inspection, right? Traditionally, I have a VA new construction home loan. And I haven't really challenged this lately, right? I always like to challenge an underwriter every once in a while and something, just make sure they pull the guideline for me. But he said, hey, Jordan, can we double check that? Because it's new construction, right? And in my career, I've always had to get a termite inspection, right? No matter what. If it's new construction, newly built, didn't matter. Subterranean termites, you got all sorts of things, reasons why. But, I would say just keep in mind as originators, make sure you're working with someone that is willing to challenge their underwriters, right? Know their guidelines, challenge them if common sense doesn't apply or agree, right? If you don't feel like it's not there, right? It's the common sense isn't there. Just ask your originator, can you double check with the underwriter, right? I don't double check the same way as another person. A lot of people will call and say, hey, do I need this? That's great. I say, no, I need you to give me a guideline. Give me the rule that you are. There's times that they'll waive stuff just because they can't find the rule. Those books are very big, right? And I said in my mentoring before, my mentor used to make me read those books, right? They're like that big. Go ahead, Josh.
Well, Jordan, so you're illustrating one of what I would say is one of the big benefits of working with our virtual mortgage providers team is Jordan is a guideline guru, and many times over the last months and nearly year now that I've had a relationship with Jordan, he has illustrated things like that I had no idea about. And in some cases, the underwriter didn't even know. I'll give you a little bit of an example. I remember we were having a team huddle for our mortgage team a few months back, and so said, I'm having this problem. And Jordan, without batting an eye, said, call this number, say this to this person, get them to send this, and then send that to the underwriter. And it was fixed that day, right? And I would guess, I don't have any data to match this, but I would guess that there's a significant amount of time where a loan is turned down or borrowers are not approved. If you could look at it from either a different perspective, right, or having guideline knowledge or even other programs, you can solve that problem.
Just challenging it. Just challenging it. That's really what I want to take away from here is just challenge it some more. If you have a denial, absolutely let us look at it, because that's my favorite thing to do is overturn a denial. Okay, I absolutely love it. But challenge it in a way that you're thinking about it in a way that it's does this really mean what the guideline means? Most of these FHA, VA, USDA, Fannie Mae, Freddie Mac, they all have guidelines online, but they also have hotlines. FHA has a hotline number that you can call and just ask for a specific guideline. That's what Josh was referencing, was that hotline. I told that LO to call 1-800 call FHA is literally what it's called, and ask them the question. They will have their underwriters specify. And there's a lot of times we take that guideline and then we give it to whoever's underwriting the file. But my point being is never late. If you get a denial, do not just roll over. That happens so often in this industry that loan officers don't realize that they think underwriters are all be all stamp approval. They're not. They're people, and they don't know. They're just like you and me. They don't know the guidelines just as well. They're following a checklist half the time. So keep that in mind when you get a
lot
denial.
of them may just be looking for the path of least resistance.
Yes, 9 times out of 10 they are.
Yeah.
So it's it's natural. Why would you want to, cause issues or, create more headache for yourself? So with that being said, it's not like these people consciously try to, deny people. A lot of underwriters try to work with lenders and say, hey, by the way, they'll call them before they deny a loan or suspend it. Usually they suspend it first. It puts it into a status that says, hey, you need to fix this before we do XYZ. But with that being said, challenge. That's just my takeaway from this week, just because I had so many last week. But I really enjoyed. I had a realtor of mine. He asked me about the VA on new construction, and I was like, I haven't really challenged that, lately. And I challenged it, and they did provide me the guideline. So, but it wasn't for me to be rude or mean to the underwriter or anything like that. It's.
Well,
I'm
now
trying
you're
to
better
make my point
educated for the next time. You're
Correct.
you're educating yourself. Best case scenario, you win the challenge. Worst case scenario, you know exactly what the guideline is and how it reads for the next time. I mean, either way, it's a win, right?
And if I disagree or if the underwriter can't provide it, I will call the hotline. A lot of times. Exactly. So VA has a hotline, so does FHA. Those two definitely do. So, but anyway.
All right. We're going to wrap up today. Some housekeeping items. Tomorrow's Texting Tuesday. I've got a couple of different ideas that you can R&D, rip off and duplicate. Wednesday, what's working Wednesday? I am going to be sharing a video lead ad that's working really well for Andrew Robinson, and I hope to have it R&D'd for myself and have some statistics, some data for myself as well. Thursday, for Tech Tip Thursday, I have a couple of different things that I want to dig into. Ryan probably does as well. And then follow-up Fridays, we'll have some good follow-up content and thoughts to help you, if not already, fill up your weekend with some appointments. If you have a couple of direct ways to take action from today, if interested. Number one, if you know of a loan originator, a mortgage pro that you have a relationship with, and they are interested in exploring other options, we would love to chat with them. A. B. If you're licensed or interested in adding that mortgage as a revenue stream to your business, we should chat. We have a model that you can do that under, and it can be very lucrative for yourself. Number three, if you have any clients that have recently been denied, or you're worried that they may be denied, or you want a second opinion on, or they're just ready to go, right? We had somebody this morning, actually, a new LO coming onto our team, has clients that are ready to make an offer on a property in a different state. And, any of those scenarios, we would love to chat. We would love to explore how we can help those clients in some form or fashion. If you have not already created your free account at wakeup.realestate, you should go and do that and check out the scripts and the templates, the lead capture pages, all of the cool stuff that Ryan has put together for all of you to utilize for free, just being Wake Up Real Estate show watchers. All right, let's make it a great week.
Thanks, guys.
Thanks, Jordan.
Yeah.
Thanks, Ryan.
See ya.
We lose him.
Yes.
I think he's